Well, it is time for another update. Market has held up for several days coming out of that holiday. That stopped today. The foreign markets held up relatively well today yet, but the American market, which is the last one to trade during the 24-hour day, did not at all. They tried very hard this morning to keep it going initially, but that didn't last very long. It started coming down soon after and kept going down pretty much for the rest of the day. Went below zero fairly early on, and in the final hour or so of trading, they were just fighting like crazy to hang on to Dow 31,000. Spent most of the time below that level and closed below it. Closed down nearly 500 points. The main thing I want to emphasize today, relative to the past for the moment, is that once again last Friday they did everything they could to make the market go up as far as possible and had what amounted to an end of Friday bounce, yet two, and squeezed every last drop out of it again on the way to the end of the day, going into the weekend, to try to absolutely maximize the upside for the end of the week, to make the weekly bar look absolutely as good as possible, as often is the case. And then yesterday they just hung on for dear life. The market basically didn't do anything. And today they lost the entire effort on Friday afternoon, and then were fighting like crazy at the end of the day to not have the market go even lower and eliminate a lot of the rest of the gain from Friday. Main reason why they were pushing so hard this afternoon is because they have been trying desperately not to go below Dow 30,000, and one way to attempt to do that is not to go below Dow 31,000. So since they were down to that level this afternoon, they fought like crazy to not go below it so as to not get too close to Dow 30,000. The point is that it looks like the downtrend has restarted for the time being, and so we'll have to see what the next day or two brings, but I have a feeling the market will be going down more. One thing I've observed lately, bearing in mind that Boeing is a Dow stock, is that, and Boeing has been having a lot of problems lately with its airplanes that are probably well known by a lot of people in the meantime. They have been talked about greatly in the press. And what is amusing to me is that over the course of the days, from day to day to day to day to day, it goes, oh, good news from Boeing. Boeing stock up, stock market up. Oh, bad news from Boeing now, stock market down. Oh, good news from Boeing now, stock market up. Oh, bad news from Boeing now, stock market down. Over and over and over and over again. This morning again, good news from Boeing. Market explodes higher. But today was also Consumer Sentiment Day, the day that one of the consumer sentiment numbers gets released. As soon as it came out, which happens after the market opens, down the market started going and kept going from there. It went down for the entire rest of the day. The actual intraday range was close to 1,000 points. Okay? It was way up at the beginning of the day and was down almost 500 points at the end of the day. Okay? Once the consumer confidence number hit, that was over with. All the upside. I suspect that will be the beginning of more. It once again shows kind of what seems to be apparent over the course of time, that the Wall Street traders can't seem to really anticipate anything, because given what's been happening lately in the big picture, why would they think the consumer confidence number would be good, would be high? It of course was not. It came in lower than it had been before. And what's worse is the consumer confidence number is actually based on information that is from a few weeks ago, because it's based on interviewing people and then compiling the information and putting it out as a number, okay, in the end. But first they have to compile all the information. This is not an instant process. It takes a while. In other words, the information is 2 or 3 weeks old in the meantime. The actual information itself, the source of the number that came out today, is 2 or 3 weeks old. Well, if anybody's been paying attention, the last 2 or 3 weeks have not been great in the world. Okay, so chances are, right now, consumer confidence is even worse than it was when the information was gathered. In other words, next month's number is going to be even worse than this month's number. Okay, so we'll see what happens when the market then. Of course, a lot of other stuff can happen in the meantime. But my point is that they'll have probably an even worse number to react to come this time next month. Okay? A couple of other quick notes, and that'll be it for today, and we'll see what the next day or two bring. The point really today ultimately being the market did not hold up so far until the next long weekend, which is this coming one. I thought there was a potential it might. It did not make it. That is not good news. Interest rates are near the highs but not at the highs, but they're holding above, well above 3% on the 10-year note. That is also not helpful. And cryptocurrencies came down hard this afternoon again too. Using Bitcoin as a reference, it is now just above 20,000 again. They tried so hard to get back above that level, came right back down to it by the end of the stock market day today, bearing in mind currencies trade 24/7. They never stop. That includes the cryptocurrencies. So they did not close at the end of the stock market day, but Bitcoin was right back down to just above 20,000 at the end of the stock market day today too, which is not good and indicates that the overall situation is not particularly healthy. So I suspect the overall beginning of the downtrend is underway again. We will see whether that gets confirmed in the next day or two, and go from there no matter what happens. But I suspect that's the beginning of it, and that's why I decided it was time to make note of things today again. The market has been holding up, coming, as I noted at the beginning of the message, has been holding up coming out of a long weekend. I anticipated that. The question was how long it would hold up. What held it up more last week was that the Fed decided to do a report to Congress again last week. That does not normally happen in June. They said it was in fact a semi-annual testimony, which is historically in this half of the year happened in July, after the some days after the 4th of July holiday. This time around, if that was in fact the semi-annual testimony, which it looks like it was, it happened in June already. And that helped prop the stock market up, as it usually does, okay, until the real world hit again. That's what I've been talking about all along. Until the real world hits, until the real world hits, until the real world hits, and the Wall Street traders have to face reality again. That happened today again. Okay, one other quick note with regard to the Fed testimonies. They are, by the law against recessions, required to report to Congress twice a year. Okay, in recent years they've been doing it more often than that. Okay, quite a bit more often than that actually, roughly every couple of months or so. But the bottom line is, since they normally did the actual required testimony in July anyway, they didn't report to Congress in June, that close to the actual required testimony. They did report this time in June, last week, and it was characterized as the semi-annual report to Congress, which is the required testimony, so it sounds like they moved it from July to June this year. Not sure why, but that's what happened. They did report to Congress in June, and that helped support the market, and they rammed it up after the testimony yet on Friday as well, squeezed every last drop out of it again, as I said, going into the close, you know, trying to make it look as good as possible. Hung on for dear life yesterday yet in the aftermath of that, in the wake of that, but once the consumer confidence number came out today, that was it. Down it went. We'll see where it goes from here. Things aren't going to get any better in the big picture. It's only a question of how long it'll take Wall Street to react to that.